In Peter Lynch's book, he talks about one of the most successful stocks he owns at the time, Pier 1 Imports. He writes, Pier 1 Imports, recommended by my wife. In fact, Carolyn is one of my best sources. She's the one who discovered the eggs. Ladies and gentlemen, women now drive the world economy. There are investment opportunities to be had here. And today, I want to talk about 10 stocks. 10 stocks that I think long term could really be successful off this trend. And I'm going to tell you about which ones I think I'm still skeptic on. I'm not sold on quite yet. Which ones I'm particularly interested in, and I think there's actually a buying opportunity even today. And so let's get deep into it here. Peter Lynch writes, how many women who bought pantyhose, store clerks who saw the women buy pantyhose, and husbands who saw the women coming home with the pantyhose knew about the success of the eggs? Millions. 2 or 3 years after the product was introduced, you could have walked into any one of thousands of supermarkets and realized that this was a bestseller. From there, it was easy enough to find out Legs was made by Hanes and that Hanes was listed on the New York Stock Exchange. Hanes went on to be taken over by Consolidated Foods, now Sara Lee. Legs still makes a lot of money for Sara Lee. Ladies and gentlemen, he had a multi-bagger investment off of just talking to his wife. He's just talking to his wife about, hey, honey, what did you buy? How was your day? How did this happen? Ladies and gentlemen, women now drive the world economy. Globally, they control about 20 trillion. They influence up to 85% of consumer spending. No. Don't get your panties in a bunch, all right? There's a whole lot that goes into this because there's still trends about like men still making more money on average. Just because they're in charge of more consumer spending and that they do more consumer spending, that doesn't necessarily mean that they're particularly always spending it on themselves or anything of that nature. But this is something to consider because they are the ones who kind of say like, I want this for the household maybe. Or, and this is just kind of, this is a trend that we will see if it continues or not. I mean, the future is very uncertain, but women being in charge of consumer spending, I'm quite confident that that will continue. I am. I know that there's a lot to be had with gender roles changing and whatnot, but I think women just like being in charge of the spending, and that's just my opinion. And I think that society will kind of continue to trend that way. But if society does go more egalitarian in that route, that would be interesting to see as well. And I think even the stocks that I'm talking about today will still do well, even if that was the case, that society just became like extremely more egalitarian in both ways, that the women were getting paid more on average as well as the men became in charge of more consumer spending somehow or some way throughout the years. That would be interesting to see. But yeah, that's why it's worth talking about these 10 stocks today. The first one being Lululemon. You may have heard of it. They make a lot of workout clothes worldwide, all types of different clothes. They have about 491 locations you can see here. But the store location is not so much what makes them valuable and what gives them their valuation. Let's go ahead and plug them into the ticker here. Yeah, so we'll just take a look at the. I got 10 stocks to go through, so I'm not going to cover them all too in depth, but I'll tell you everything I know. So we got a 48 billion market cap on this guy. What gives this a 48 billion market cap? That's almost 10 times the valuation of Wendy's. Well, they make damn good workout clothes. So that's really what it is. It's, investors are really excited about this company, but there's a lot to be excited about. The valuation is frothy, so I'm not particularly interested in it at this point, but it's very much on my watch list for ownership reasons, because I think there is a bit of a narrow enough moat there with how much people do like these products. And they've been around for a while. They came out of Vancouver, Canada, I believe, and it may have been like the late 90s or something like that. And but yeah, they're doing their thing. As you can see, PE at 40 currently. Just a little high. I know historically it has been running high, and you can miss out. You can miss out on great kind of like growth at reasonable prices kind of stocks if you just are scared to buy because of PE. But it's just not time yet for me personally. I can't really put it against other things and say this is definitively the best thing I want right now. But it's very much on my watch list. So let's see what Morningstar was saying about Lulu here. Yeah, they say shares are overvalued. They say narrow moat as well. I definitely agree with that. They say 208 for their fair value estimate. Let's go ahead and plug it into the bowl here. So yeah, we're about at the 50-day on the 5-year. Yeah, I think this definitely could fall sub 200, and then I would start getting interested. Morningstar thinks right about there is where you should be buying right here, and that's probably a purchase with the margin of safety. So that wouldn't be a bad idea to look for that. Google Trends here, very much like a growing company. I'll even go back into the terminal. We got to take a look at how they've been growing these financials. Yeah, this income statement here. Oh man, that change year over year, 21 going into 22, that is incredible. I don't know how they blew up their revenues like that for a retailer. That's certainly impressive. But yeah, I mean, 20, this consistent, that's like a CAGR 20% because you got the 10 here and the 40 there. So well above 20. Incredibly impressive. Definitely something to keep an eye on. Google Trends, it's growing, it's looking good so far. The next one we got is Figs. Figs is a scrubs stock. It is they make like healthcare. They make healthcare apparel, and it looks pretty strapping. I've heard it's like really comfortable and is strapping. So it's been my friends have really who work directly in like the patient care space, they've been telling me all about how it's something that just about everyone kind of like wears. It's like, oh, gotta get Figs, got stuck up on Figs, my Monday through Friday Figs, if any of that makes sense. So, yeah, it's let's check out the website here. It's got like great presentation. You could be active in it. It's very comfortable. This is not fake, but yeah, it's very comfortable. Comfortable apparel. I next time you're like in a hospital or anything of that sort, like genuinely ask any just ask the healthcare workers what they're wearing. I think you might be surprised how many of them choose a dress in Figs. So yeah, let's plug this into Ticker. Let's talk about let's see what we see on Figs here. Yeah, so this came, it just got listed sometime late 2019, it appears. Wow. Okay, this thing is growing like hotcakes. Yeah, this is a heavy growth stock. Yeah, crazy year-over-year revenue changes. How bad are they doing on debt? Current assets to liabilities. Okay, that's not too bad. Total liabilities and equity. Okay. All right. Let's check out the valuation. I personally have an idea where I might open a position with them, but I think around $13 it might get interesting. I think it's still a little high for me right now. Be buying it around a little bit sub 4.5 price of sales. I think that wouldn't be unrealistic to at least nibble. 55. Yeah, the PE is just a little high, actually, honestly. Yeah, I kind of maybe would want it to come down to like 10 to 13-ish. But yeah, it's really one of those stocks where just kind of my own like personal knowledge, I guess, is kind of like biasing me into at least like mentioning it on this list. So yeah, that's Figs. It's just very much a heavy growth stock. Just look at these like year-over-year revenue. But I'm not gonna like lie and tell you that they're like profitable or anything of that nature. They're still just kind of like that company that's burning money on themselves, and obviously in like this kind of environment where you have like inflation and whatnot, that's not particularly attractive to investors. But I'm kind of looking longer term on this one. If I'm building the BECKY portfolio, I might want Figs to be in there. This is why I thought I'd mention Figs for the BECKY portfolio particularly. Majority of healthcare workers are, or direct patient care workers are women. Um, yeah, so 77% this statistic, 76% that statistic on census.gov at the top there. Yeah, just something to know if you don't know it. Yeah, I guess look into it for yourself if you don't trust me. That's fair. The figs on Google Trends is the past 5 years. I think Lulu that I just showed you last trend. This was all time. So this is Lulu. Yeah, that was 2004 to now. So this is a bit of a shorter chart, but you can see that it is in general going up. More people are starting to wear figs and kind of view it as trendy. The next stock is Ulta Beauty. Um, yeah, kind of mostly it's a makeup department store, I'd say. But they have like men's fragrances and stuff like that too, which I do appreciate. Um, so how many locations are there for Ulta? About 1,200 locations. Um, yeah, 21.3 market cap right now. Morningstar is saying looks good, shares expensive. So they like the growth projections and everything. They just have a fair value estimate of 282 per share. We can pop that into the bowl here. And yeah, Bull is saying it's 22.5 PE. I definitely think this could get haircutted a bit on the PE. SPY is a 19.5-ish or 19.3-ish right now. So definitely could come down. I don't think Ulta Beauty particularly deserves to trend at a higher multiple than the S&P 500 or anything like that. So I would get interested around 300 or lower personally on Ulta for me. But yeah, I think it's a really nice stock. I see the stores about everywhere, and I always hear just the women in my life talking about like Ulta being like a regular part of their errands. So I'm just kind of like thinking with that early Peter Lynch mentality, I guess, of what's kind of going on in their world. The next thing is Adobe. Adobe, this is a 194.6 billion market cap. So this they own the Creative Cloud. This is really kind of why you want to get into Adobe. So it's basically six of the leading softwares in the world: Photoshop, Illustrator, Acrobat, Premiere Pro, InDesign, and Express. Um, so Express is for like templates, InDesign's for like magazines and like handouts, stuff like that, posters. Premiere Pro is for like video. That's something I'm trying to get into for like video editing. Acrobat, that's something for like documents and yeah, it has like e-signature tools. Illustrators for like designs and it's very artsy. And then Photoshop is like you should know what Photoshop is. It's kind of in the name. It's you kind of doctor your photos and enrich them with certain digital tools. Um, and it's been around for a while, and it's only gotten better. Photoshop's immensely better. I first started tinkering with Photoshop in high school, actually, kind of on the DL, and I just did little subtle things. And it's just like using it now compared to what it was then. It's monumental progress. How like software kind of hits those S curves of just how like the smoothness of the tools as well as the amount of tools and the different like the fluidity of the program. I'd also would mention is it's so much smoother now compared to what it was then. It was just a little clunkier back then. um, so yeah, Adobe, I just want to finish off with Morningstar is very bullish on Adobe. They have a FVE of 615. I definitely agree. I actually think this would be the first one of the list where I'd say I'm actually a buyer today of this stock. um, so the reason why, we can plug this into the ticker here. I will explain what I see in it that's really attractive. I really like the idea. It's a very, very sticky subscription model. I mean, if you start using the Adobe software, you're not going to want to use anything else. Um, and this changed over 20%, 23, 23.7, 23.7. Like, look at those year over year revenue changes. I'm clicking too many buttons. Absolutely, absolutely phenomenal year over year revenue changes from this company. Uh, Take a look at the valuation. it's just more and more people are starting to use the Adobe products. And another thing I want to mention is that universities, because Adobe's the best, universities continually have to basically pay Adobe because they can't afford to not give students the best software, if that makes sense. So that's just like another part of the stickiness. And then you consider things like movie studios and all those like movie interns and all that stuff. They're all using some sort of Adobe. Um, but this stock's pretty much as cheap as it's ever been right now. Um, you can look at the price and be like, hey, I think that this stock, Adobe's like, why are we looking at figs? This ticker app sometimes. Okay, so now we're finally gonna look at the valuation. All right, so but yeah, this explaining why this stock's about as cheap as I'd ever seen it. Just going back like the last few years, take a look at this. I mean, when has this ever dropped to 10 price to sales multiple, price to earnings sub 30? It's just it's having it's compressing. Its price is just compressing, and its valuation is compressing in a way that it's never done before. And it's fundamentally a fine company. There's nothing wrong with it, particularly that's decreasing its stock price relative to today. So that's why I'm a buyer. I'm gonna make money long term off that arbitrage, and it's a company I'm very, very excited for ownership of. I'm very, very excited for ownership of this company. Just like my face lights up when I think about it. And I'm sorry, I have to take a look back. Yeah, these year over year revenues are crazy. 23.7, 23.6, 15.2, 22.2. Absolutely, 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 absolutely nice. Lots of operating expenses on this company. That's very interesting. I definitely think it is very much in that kind of like growth under reasonable price kind of category. It's still, but it's very much the one I want in my portfolio. Um, so yeah, that's the story on Adobe. I'm a lover of Adobe here. Next one, Chipotle, CHP, I believe. Yep. Um, they have 2,750 locations globally, most of which are in the U.S. Should be familiar with Chipotle. It is a fast food kind of almost stock. They do like some delivery and stuff, whatnot. But yeah, just for fun, I kind of like made my, I guess, ideal bowl on the creative bowl thing. Yeah, this is what I normally get, like uh, just a burrito bowl, like chicken and like double brown rice, half beans, sour cream, extra cheese, extra lettuce. But this is what I love about it. It's just like that's a pretty balanced meal, like 100 carbs, 62 G's protein, 46 G's fat, and the carbs and the fats are pretty. I guess it's not like just like artificial sugar. You're getting like carbs from like rice and beans, and then fat's probably like mostly monounsaturated, polyunsaturated fats from like the sour creams and like whatever else, the rices and stuff. So um, yeah, it's a very balanced meal. That's about what I try to get. Like 50% carbs, and then like heavy tilt protein with about like 20-25% fat. Yeah, I love that. It's just one meal. I just show up, boom, just give me calories, and it's like I don't gotta think about like how's this gonna affect me in my like health. Am I getting like too many of like this macronutrient, too many of that It's like no, Chipotle just kind of like balances the meal out for you. I guess the thing you would have to watch out for. I mentioned this is like I guess I don't know where the sodium is on here, but they should probably show the sodium. I'm not gonna get into all that, but yeah, I don't know. But just comparison, I guess to Taco Bell. This is like a steak quesadilla, 520 calories. Most of them come from fat, which is 48%. So as you can see, the split's entirely different with some other fast food items. Chipotle doesn't necessarily have that. You can actually kind of like um, you can get a bit of a different kind of like three macronutrient spread. It's almost like building your portfolio. um, so yeah, Chipotle. I guess let's plug it into the. Yeah, we should always plug these into the thing. Chipotle. CMG is the ticker on Chipotle. Yeah, so those are pretty good year over year revenue changes. The 2020 or 2021 one was a huge blow up year for them. Part of the reason you have to consider is so many of those small businesses closed because of the crisis in 2020. Um, so yeah, that's a bit of a anomaly year. I think it was baked into the price pretty well. I'll tell you where I'm kind of looking to add to this one. Let's take a look at the historic valuations, though. Oh, this is it's doing it again, man. At least I caught it this time. Yes, sir. All right. Ooh, this is actually, hold on. This is kind of getting closer than I thought to my open price. Might be interesting. So, they're at a 48 on a normalized price of earnings right now. That is historically never been seen. Wow, 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 wow. Like when? Like ever? How far back will this go? How much did I say? Oh, this is crazy. Wait, hold on. This could be really interesting here. So they're at a 48 right now. I think 2018 was like their worst year. They had like a bad earnings report or something. I was kind of looking at that, doing some research. Yep, yep, yep. Okay, 17, late 17, early 18, they were struggling. Okay, so the lowest multiple they ever held was a 34 normalized in November or September 30th, 2017. Um, that's kind of interesting. And they're floating at a 48 now. I definitely think that CMG could come down. I was the open price I was looking for was like 1300, but eh, I'll have to kind of like feel out how like what the market's kind of like feeling like to me at the time, and I'll probably want to open it more like 1100, 1200. Um, but yeah, I think that it's a business that is just growing so exponentially, and people just love just being able to go there and just get those Chipotle meals in particular, and how they kind of like stand out um, from the rest of the fast food industry. It's certainly interesting, and it's certainly kind of been a monumental investment for the people who have been in it. It's just now a matter of how do you think Chipotle is going to perform as a mature company. This is a mature company. We're going to look at the bull here. Um, the reason I say that is it is a 41.5 billion market cap, so it's not going to like double overnight or anything of that sort. It's kind of more that like it may double in a number of a couple of years or something, and just be like a healthy stock that does well in your portfolio, something of that nature. So yeah, I think around like this 200, that's kind of where I'd get interested. I wanted to like flirt with the 200 before I get interested. So I'm kind of thinking like below this 1250 bar is kind of where I want to get interested. I do see these resistance points. Yeah. So, mm, there's a resistance right there at the 1286. Maybe worth buying into the resistance, maybe not. I'm not quite sure. I'm not too pressed to go pick this one up, but I do love the company, and the stock's been historically pretty good stock to be in historically. So yeah, next one is Starbucks. They have 32,660 stores across the globe. That's so many. Oh my goodness. Wow, 5,400 stores in China. Yeah, it's a lot. Yeah, Starbucks. Let's take a look at Starbucks. Starbucks is it's Modi to me because when people get those Starbucks cards, they keep a lot of money on those Starbucks cards, and it's actually you'll be really surprised like how much of the world's like financial currency is under like Starbucks control, just from like the predominantly a population of people that's predominantly women that are keeping money on their Starbucks card, just like running around going about their day. And they get rewards. They get rewards for like keeping money on their Starbucks card, making their purchases with their Starbucks card and stuff. Um, that's what really like interests me about the company. When I read and learned about just kind of like how Modi that Starbucks card is. Um, 21 PE currently more or less. $77 for this guy. That was 126. of half a year ago, roughly. That's incredible. That's incredible. But good company, good brand. I do like their coffee. I don't particularly like go to their coffee a ton, but when I do go, it is like a treat. I really enjoy it. Um, let's take a look at the thing in the ticker here. We got what they doing today? Yep, 22.97. I don't know what Weeble was telling us, but roughly about the same. Um, yeah, it's just historically they've held kind of more of a frothier valuation around like more like a normalized PE towards the 30s, or even here at 22 in 2020 at one point it was a 76 for ownership of Starbucks. You had to pay a 76 price earnings ownership in the business, and that was that was the high. That was the right here. Yep. Wait, no, it would have been 2020, right? So 2020 July. It said July 2020. I thought it's doing that thing again. It always does. I don't know why it's doing that to me so much. But yeah, that's all. That's like Starbucks is just historically at a historically very very cheap valuation. That's it's certainly interesting, and I think if you're thinking about, hey, I wanted to build out a Becky portfolio, and I want good stocks for the Becky portfolio, maybe it might be worth looking at Starbucks. Just might be. All right, the next one we're gonna go into is FB, Meta or Facebook, and this is kind of a play on like social media. This is the most like unisex. I don't know the term, unisex term, I guess. On this list, I'd say this is more of like a this is like because I think like guys really like to use this social media too. I don't think it's so much of a split towards women, I would say. Um, but as you can see, it's Instagram in particular is like really popular with the teens. That's owned by Meta. 76% of American teens aged 13 through 17 use Instagram. 75% use Snapchat, and 66% use Facebook. So like the Facebook is dying, but it doesn't really matter because they seem like to be moded in with Instagram with the youth. Um, yeah, this survey had 80% using Instagram while 20% were using Facebook. So me particular, I'm not too worried about like just kind of like that like weird like Facebook dying out thesis. Because like they're moded in by so many different like apps and through Instagram and like WhatsApp and whatnot. Um, and we're gonna listen here to investor Manish Pabrai. He's gonna talk about Facebook stock, why he thinks it's an easy double, and I just think it's kind of like interesting hearing his take. I think he explains the kind of like the value. Like this is definitely a stock where I'm a buyer today of, and in addition to Adobe. And the reason why is it's the valuation. The valuation is so attractive to me today, and he'll kind of get into why here.
Ahead. Um, my situation when I look at Facebook is that I see a company which is that revenue is not going anywhere. Their cash flows are not going anywhere. I think those are pretty solid. I think the user base is pretty solid. So if I were to look at Facebook, I would say that even with 5 or 10% annual growth, which doesn't really seem like a big leap for them to get to, the stock ought to be a double at current interest rates. So I don't have any issue with saying that Meta in 2 or 3 years is an easy double. I think that's a reasonable bet. When we look beyond that, if you're looking for something more than a 2x, I tend to be skeptical because the way my mind works, everything related to Meta is an option I'm not willing to pay for. So whatever they're spending on Meta and whatever they're claiming, in my opinion, I don't think Facebook themselves understand what Meta is. I think they throw a lot of words around, and I think we will, as a society, maybe in 5 or 10 years, have some semblance. And one of the things about these leaps, these technology leaps, Meta is a very big technology leap. If you go to Google Glass, right? So Google Glass, I thought
Yeah,
was
so
a
that's kind of like the gist. It's Facebook's like almost because of the rebrand to Meta, they've become like a they become just kind of like a call option almost on the metaverse is what he was saying. Now I'll explain how that works. So when you buy Facebook, you're buying a social media empire. Instagram, WhatsApp, uh, Facebook. It owns all those. It owns Oculus. So some of the leading VR already is owned by Facebook. I think that's part of the reason why they decided to rebrand into Meta. And it must be noted that they rebranded at a time where they were going through like a whistleblower scandal. So I just want to like put that out there. So we got a price to earnings of 15.3 on this guy right now. That's historically like impossibly low for Facebook. The Facebook's never traded at a 50, like this tech company has never been that low ever, ever, ever. And I'll tell you how it got so low. Pretty much, Facebook crazy cash position. I think it's like 50 to 60 billion on a company that's worth. Go to the overview here. Company's worth 510 market cap, 510 bill market cap. Got like a 50, 60 bill cash position. Manish Prabhu was saying that you could only forecast like 5% revenue growth, and that company's still worth like $1 trillion. It's still $1 trillion company. It's just the valuation has gotten so compressed to the point where if you are a value investor, and you just think, if you're trying to think as rationally as you can, it's really hard to say why wouldn't you bet on Facebook at this point, for a 1 or 2 year long double or so on your money. Now, Manish Prabhu is also saying it's a call option on the metaverse because they've done this whole rebranding to Meta, and one of the reasons why it sold off so much, we'll take a look at the bull here, is it sold off so much because investors weren't really liking the rebrand, the whistleblower, as well as they announced they spent 10 billion on the metaverse. So that cash position that was so hefty that investors love. Well, 10 billion of it just kind of like got burned in a quarter on the metaverse, and investors were kind of like, oh, what's up with that? We don't really like this whole rebranding thing. So like jump ship, which I guess I respect. If you want out, you get out, but. Yeah, so like 10 billion on the metaverse, so it's kind of like a call option because either it's going to work or it's not going to work. It's going to go one or two ways. I wouldn't be a buyer today of this so much because I want to bet on the metaverse. I'm kind of a buyer of this more because I want ownership like Instagram, Facebook, WhatsApp. I think it's going to double just based off of like that empire it has alone, and that this is like a messed up valuation. But it's kind of a call option because either it's going to work or it's not going to work as far as the metaverse. And that 10 billion they sunk into it, and they could sink another few billion into it here or there, which is really scary. And that's why I don't blame investors for just dipping out, because they don't really know like how that money's being spent and things of that nature. But Zuckerberg's been a bit of a scary fellow to bet against. And then you got them already leading with Oculus. I don't think it's too far out of the realm of possibility. If I think that we're going to be like, oh, the metaverse is here in like the next 5 years, I'd only put like a 19% chance on that. Like, I don't really think that's going to happen. Next like 15 years, then maybe my percentage goes on to like 40-50%. Do I think Facebook will be at the helm of that? I mean, looking out like 15 years at the metaverse, like 2037. I mean, I do think Facebook probably will still be around. But there's so much that'll happen, in time like that. And that'll be really hard to, forecasting out that far is really hard to say. And I just don't, I'm not convinced so much that the tech of the metaverse is here, but I am convinced that these valuations are kind of like misconstrued, and that I can have this stock and not even like really care about their bet on the metaverse, and I think I'll still do well just based on the valuation arbitrage. But yeah, oversold here on RSI and things of that nature. But yeah, it's a position that I bought very heavily into today actually, and Yeah, so what else? What was our other? Oh yeah, we got here Pinterest. So this was a really interesting one. Um, I see a lot of like women talking about like, oh my god, my Pinterest, I love my Pinterest, and my Pinterest page is like so cute, like things like that. Um, and I don't know what's up with this because Google Trends has it like this website was maybe at its peak when it was like a private company or like not publicly listed, and it got publicly listed, I think, sometime like late 2019. And I don't know why the trend just has. I just want to point this out. The interest is going down over time, according to Google Trend. But that's kind of like a. Not that it's going down. Maybe it's just not like surging. Google Trends is kind of an interesting way of just kind of like getting. Just kind of like generalized data. um, Pinterest, yeah. So this is kind of interesting to me. I think around 15 it gets really interesting. It's a 38 PE according to this like Google thing here. What's Morningstar? Morningstar saying it's very attractive with a $60 FVE. They're probably just giving it a higher multiple in their model, I'd imagine. I'm not too sure, but let's take a look at the ticker and see what we can dig up. We were looking at Pinterest. Yeah, that's right. 13.4 billion market cap about. Um, it's a social media I've been definitely seeing more of. Well, this revenue year over year changes. This is a heavy growth stock. But that normalized PE is kind of nice. Like, it's just kind of I feel like it's just a hefty valuation at this point, and it's kind of hard to see when investors would want to like just jump ship to the point where, all right, let's see how low of a multiple this is saying it has right now. Yeah, so it's trading at a multiple the same as a SPY right now, which historically it's had a hefty multiple as much as like, in like 2020, I mean it was valued like it was like Tesla or something. Like look at these like 1,000 normalized price to earnings. Like but here I think it's starting to get kind of more realistic, and like their earnings and their revenue statements are very much here and now, and I do think it kind of is an interesting one to look at, especially when you look at those 50 type percent year over year revenue changes. And when you consider it's just like a familiar, like all these stocks I'm talking about today are familiar to me. I'm not just like talking about like, oh, some chick said that like this is like a cool stock or whatever, and like I buy this all the time or whatever, and it's like some like weird product I've never seen before and it looks weird to me or whatever. No, this is all stuff that I think is cool. Like the people that I've talked to think is cool, and that I'm looking at the stock fundamentally, and I'm like, yo, like there could be something here. So Pinterest, I think I kind of do want to buy it today, but I'm not quite there yet. I kind of want to see it go more closer to 15, and then maybe I'll kind of start dipping my toes in. But I want to see it kind of start like inching closer to 15, and then I think everything just comes more attractive on the risk reward basis. And but I think it's really interesting that Morningstar was giving them such a high multiple. They said they see the top and bottom line. hmm So they were saying the iOS changes were not as bad for Pinterest compared to some other social media. It's very interesting. The next one is Playboy Group. Playboy used to be like a kind of like a nudie magazine that mostly fellas would enjoy, and it's quite the opposite now. It's actually like a clothing brand, and it's predominantly definitely most of their sales definitely come from women. And yeah, I thought this was really interesting. This is like the past 5 years they like shot up for some reason in September 2017, and but the interest over time, according to the trends chart, which I said is like the most arbitrary thing I'm ever gonna ever talk about, which is so insignificant to anything, like technical analysis is anyway, is it is still ascending over time because you got like single digit interest over time here, and then it's hefty double digits now. It had a huge spike in like kind of like the pandemic type time too. So kind of makes you wonder, yes, Playboy kind of making comeback as like a whole different brand and things of that nature. They also own Centerfold, just kind of like directed by like Cardi B is their. I don't know why, but Cardi B is their creative director. The only reason I know that is because of the stock, I promise you. But okay, so like Cardi B is their creative director. These are like some other, I guess, people that are like doing stuff with Playboy, and so this is Centerfold. This is kind of like I don't know if you guys are familiar with this platform. This is OnlyFans. This is like a software that I guess like people use, predominantly women use, and then they can have like people subscribe to them, and they can like have like private photos and stuff that go to like their fans or whatever. And it gets used a lot for like kind of like the like the sex interest, I guess, marketplace. And so the OnlyFans had like a scandal where they were saying, this is 7 months old. They were saying like, hey, we're not gonna have like sex on our site. So like we're gonna, this is like for like skills or showcasing skill. Like it was kind of weird because like everyone was using it for like that aforementioned purpose I was talking about, and then like they're like, hey guys, you got to use this for like showing off your skills, and it was like really weird. Um, but that's why I think like Playboy is interesting because they have like some like creators on there already, and they're just kind of like starting their own platform. They're like, yo, can you even trust these like OnlyFans people? Why not come to like a more reputable like brand? Um, and yeah, so like Playboy is just kind of like Playboy. The origin was basically the whole like nudie magazine, all that like rights was sold off to like this other dude, and this other dude's like, all right, I'm like restarting the brand. We're doing like clothes, blah blah blah. And so far he's been killing it. He's been killing it. The fundamentals of the business have only gone up. Um, but yeah, I just think that's interesting. I'm kind of more interested in this as like a clothing or like a retailer. We can plug this into the um, but yeah, I definitely think the centerfold part is just a bonus, and if it does take off, I think there is some money to be made there. I have heard about OnlyFans valuation in the private markets, and it was pretty impressive, the valuation that the company was able to attain from investors. Um, yeah, so wow, I mean, a 1.2 at 24 price sales is a trash metric, but it's just kind of like just something to like consider, just how much that this stock's been beaten down, and how it's not like they don't make any money or anything of that nature. Um, you check out these changes, like 89% year over year revenue growth in 2020, and 67% in 2021. They're burning money on themselves, just trying to like on marketing and whatnot. Very, very much a growth stock. Um, but it's one I definitely would watch, and I definitely have it in my Becky portfolio. So, the last one I would just want to talk about very quickly is Crocs. Crocs is a footwear brand. They own the Crocs Lite. I believe it's called Crocs Lite. Is the like material in the Croc, and I think that's what attracts a lot of people to it, for like comfort and like ease to clean. They just like swear by their Crocs. I think a lot of people think they're like attractive, cute, or comfy or whatever. I don't know, but it's like, yeah, it's like had crazy interest over time. You can see like 2004 to present just how much people are just like Crocs, Crocs, Crocs. Especially like during the pandemic, I think I read like an article or something about people were just caring about like comfort more, about what they wore in the like in the in the crisis. So like I don't know, maybe that's what sent Crocs kind of like skywards in far as like interest and things of that nature. But I just am interested in it because I have seen like mostly women wearing the shoe, and I guess that they're in charge of most of the consumer spending. It's worth noting. I see some like kind of like boomer age, like middle aged people wearing it too when they're like outside and gardening. So I was like, okay, that's like a thing you can do too, I guess. So yeah, we'll just check out some of the balance sheet here. Wow, 66.9% in 2021 for year-over-year revenue. That's definitely an anomaly when you consider their past 2 years just 12.6 and 13.1. Yeah, for a retailer, that's a little absurd. I don't know if they're gonna keep that going, but that'd be interesting if they could. I just don't see like how they would. I would only expect like from here maybe like 10% or something of that nature. I don't even know. Yeah, I'm not even convinced that it's just for retailing. I just want to like look more into it. Um, I'm not thrilled with how much liabilities they have. I kind of want to like see if they can get rid of some of this debt, maybe. But I do think that the valuation is very attractive, and their earnings are very here and now. The ticker sign me out. No ticker. Oh man. All right. Yeah, ticker has been. So yeah, that's fine. We're gonna end the video there. Thank you guys so much for your time today. That's the Becky portfolio. We're gonna go back through the 10 stocks that I picked. We got Lululemon, Figs, Ulta Beauty, Adobe, Chipotle, Starbucks, Facebook, Pinterest, Playboy, and Crocs. So 10 stocks going off that trend. We're gonna see how they do in the future. The ones that I'm excited most about, if I had to buy them today, again, that would be, I would just go in this order. I'll literally try to see if I can like go in order for y'all. Um, Facebook, Adobe, Pinterest, and then after that I probably I really like Crocs. So no, I'd go Facebook, Adobe, Crocs, Pinterest, um, and yeah, those are my top five. Yeah, but I like all 10 of these, and I think it's just hilarious, that Peter Lynch story, and how consumer spending really is driven by the women of the world. And us, I think like most dudes are like, or predominant, the finance people are predominantly like dudes, and they like tinkering around with their like stocks and stuff. But women are really the ones who drive the economy. Um, so yeah, I'm Zoomer Value Investor. You guys take care. Have a good rest of your day. Peace.